Welcome back, YouTube. So it's rare I get to see you guys this up and close. Typically, we're looking at charts, and I'm minimized in the corner. But today we're going to have pretty much a conversation. We may look at some charts here, depending on how that goes. I don't necessarily prepare the videos. I just do the research, and then I come on here and I try and talk to you like you were in the room, right? So this video is going to be based off of when can we expect some price movement? Three things that we need to know going forward, and just some general information that I believe is relevant to where we are in the cycle. So the first thing is that we need to cover the three things that you need to know, and that is going to be kind of the three things. I discussed them before, but never in this format, as far as for how they affect price action and the market overall. Because sometimes things can, as I related to in my last video, sometimes things can cause the market to shift or in a short term look like something that it's not, and it kind of can trick people out of its position. And we kind of witnessed this with Tesla, Microsoft, and Google this week, where we expected Tesla to tank, and that wasn't necessarily the case. And then we got this pump after hours yesterday with Microsoft and Google. And really, you just kind of have institutions playing these games with the market here. And don't think for 1 second that's a coincidence that these things pump after hours. So we'll see this type of plays going forward, right? We'll see these pumps here probably at around 100,000 for Bitcoin, and we'll see some extreme volatility in the market. So just kind of brace yourself for that. But the three things we need to know, right? The biggest thing I want to start with, because I think it's relevant, is the macro events, right? So whether that be inflation, the threats of stagflation, war, anything like that on a macro level where we have the potential for institutions to rebalance their portfolios and their percentages that they're exposed in certain assets. So obviously they're heavy hitters in the crypto market are going to be Bitcoin and Ethereum. So when I mentioned rebalancing, it's not necessarily them liquidating all of their positions, but they have how they balance portfolios is more so by percentages. So they'll have their heavy weighted coins like Bitcoin and Ethereum, and the other ones will get capital as allocation based off of what's going on in the market, their risk tolerance to reward ratios, whether or not they want to decrease in a position or a certain coin and raise it in another. So that's why you can kind of see some divergence there between Bitcoin and a lot of the other coins. Because sometimes people say, well, Bitcoin and Doge were trending together in 2021. This price meant that price in 2021. And this price meant that price in 2020. And now it's doing something different. It's going to do something different every cycle. Bitcoin, after this halving, is now more rare than gold. As this progresses each cycle, that divergence is going to get wider and wider. Now, obviously, Bitcoin, the law of diminishing returns is going to start to apply. And, people will ultimately it'll become an institutional game because it'll be easier to generate money and lower cost coins versus Bitcoin, because it's going to take a lot more capital to go from for Bitcoin to go from, let's say, 200,000 to 300,000 versus something like a Doge going from 15 cent to 30 cent, much less capital. So you'll see that divergence there, but because of the rarity of it, it'll be held, and that's why we're seeing like these ETFs and stuff coming in, because it's going to become an institutional game. But that divergence is going to be there, and we'll see some it relay to a point, which is when capital comes into the market. Obviously, Bitcoin, Ethereum, they're going to suck up most of that capital, but normally the notion of rising tides raise all boats kind of applies there, because typically when they get that allocation, you'll see very similar action in the charts, and we'll take a look at that in a moment. I do think it's relevant to do so, but you'll see very similar action in the charts, and that will give a signal as far as for how the market is feeling. Now, obviously, we can look at things, which is what we've done, like shorts, long, the ratios, liquidations, all these things apply, right? But ultimately, when you're looking at these macros here and how they adjust their portfolios, that's going to play a part in the price action and the tone of that geopolitical stuff. All of that is going to be really relevant to how that is portrayed and the volatility of what's going on based off of the extreme relevance of whatever that macro event is, whether that be interest rates not coming down, a war, an attack, all that kind of good stuff. It's going to cause volatility and selling off of certain positions and increasing in others, which they believe is a kind of like taking off their speculation bets and kind of increasing their position on what they believe to be sure things. So, and depending on where you are in the side of that equation, that can cause panic, sell-offs, um, sideways trending, all that kind of good stuff, and it kind of can throw off some chart patterns because you can't predict macro events on a chart, right? So when you have there's a couple things you can't predict on the chart, right? Charts are, when you're looking at charts, you're looking at, and we can kind of transition into the second point here. Charts are, you're looking at previous pools of liquidity, supply and demand zone, support and resistance, whatever you want to call it. And you're saying, okay, what is it likely that we're going to have the similar price action going forward here? Is this normally a place where people are comfortable buying the asset? Is this a fair market assumption here? Or is this a place to grab liquidity? Do we need to go low? Is there panic going into the market? And that leads us to whale selling, and or the larger holder selling, pulling liquidity, trading, day trading, swaps, all that kind of goes into this area. And shorts too, and shorts and longs too, because they'll have their certain points where they'll certainly take profit. And you can't necessarily chart that to the T, but it plays out based off of history here, and you can kind of get a proposition to say, okay, well, what's likely to happen, right? And that's what we do here. I think that's very important going forward, is as we get into the meat of the bull run, just know that sometimes the indicators are going to be saying sell, and the asset is going to continue rising for quite some time. If you go back, for those of you who like RSI and MACD and all that kind of stuff, if you go back and look at some of around the peak bull run times, you'll see that you'll have RSI, MACD, and all that overshooting and screaming sell for weeks at a time, and the asset is still going higher and higher and higher. So sometimes, depending on where you are in the cycle, those indicators can adjust their relevancy, right? So in a bear market, they're certainly going to be more accurate and more tied to what's happening in the trends. But in a bull market, just know that when you get around that FOMO, that peak bull run time, that it may not necessarily be true. And also, as we talked about in the last video, looking at some of the charts, when it comes down to history, we've seen these sell-offs where after the halving, you have a 50% sell-off, and people are calling that the top and the bottom, and then it runs to the all-time high. We've seen this a few times after the halving. So that's why knowing history and kind of applying that can get you in a good space here, so that you're not, like say, tricked or manipulated out of your position early. Because the people that, when Bitcoin went to 12,000 and then dipped down to, I think, 3 before it ran to 17,000, they were already calling it the top and the bottom. Like the people that sold anywhere in that range, they could have at least tripled their investment, if they bought anywhere else besides the 12. But even if they bought the 12, they could have at least got 50% if they simply held a few more months. So there's something to put out there, not necessarily saying that that's 100% guaranteed to happen this time, but I wanted to make sure, for those of you that follow my channel, are aware of it, because these types of things happen in the bull run. And I'm going to try and do my best to make sure that everyone that follows my channel is a little bit more prepared than they were last time for the ups and downs of the bull market. Most of you have experienced your first bear market, so now you're going to be in the beginning of the bull market to the end, or whenever you decide to exit, because most of you got in the bull market somewhere around peak, right? So somewhere around peak. So you kind of are completing that full circle now and experiencing all the ups and downs. So as we approach that run to get to a peak bull market, it's kind of going to give you guys a notion of what to expect. So going into the third point is going to be, obviously, you have sentiment based off of the retailers. I want to talk about that because you can have panic, and you'll see that, I believe, for Doge, probably around previous all-time high levels. Shorts will obviously come in there and try and get the asset down, especially the people that were holding since 2021 or they have much higher DCAs than normal. They're going to absolutely probably take profit at the first hint of a sell-off. Nothing wrong with that. Again, I'm not here to tell you when to buy, when to sell. Just relaying information so you can compile that with your own research and decide what's best for you. But there's certainly a psychological aspect to it, right? We will see things like that probably around the dollar mark as well for Doge. For Bitcoin, certainly around the $100,000 mark. We'll see a great notion to push down. And I want to kind of go over shorts and how they work. That's one of my favorite things to talk about. But you'll see articles start to spin, right? Kind of like when you're getting ready to approach peak run, you'll just be seeing, the to the moon articles. It's up this percentage. It's going to be this excitement. And then you'll see this twist, because you have to keep in mind, a lot of the institutions and stuff, they own a lot of these articles coming out. Like Citadel owns Motley Fool. There's many examples of the companies that are leading in the investing sector also own the information that you're reading to do research. So that, you can say there's not an invested interest, but if you believe that they're going to publish something that goes against their positions, you're crazy. But you'll see this twist here. And when you're short something, typically you want to take out the short first, and then you want to cause panic in the market and kind of ride the news and go down, right? Just because like things have shock value and they can devalue a company, even though there's nothing wrong with the company fundamentally, but because of the shock value, it's causing people to panic and sell because no one wants to be at those higher numbers when they could have taken profit. And when it comes to shorts and even things like Doge, kind of like what happened with SNL and Elon, what happened is you can be in a position where some shocking news comes out and they have the ability to short, because shorts create a sell order immediately, even though they haven't necessarily returned the asset or purchased the asset. It's a promise to do so at a future date. So that sell order is generated like as soon as they take it out. So that counts as selling pressure. And then you have people that are actually selling the coin. So it's kind of like a twofer, right? You're getting like a 2-for-1 in the immediate time of that panic. And then it creates the illusion that the asset is selling off more than it actually is. So then it really starts to sell off because people are panicking because it looks like it's selling off, if that makes sense, right? So, and then of course they're able to ride that. And then when they actually do decide to purchase the asset to close their short position, for example, if they cause this panic at 15 cent and some bad news comes out, I take out the shorts and it goes down to 10 cent, right? They then purchase the asset for 10 cent. But now what do they have? They have a 5-cent spread based off of when they took out the short and when they actually return the asset. So that's how they make their profit. So you'll see things like that. You'll see spikes in shorts. And this is one of the reasons why I like looking at longs and shorts, to kind of see the investor sentiment and see which ones are dominating, which is why I think it's very important that we look at this point in time in the cycle that the longs are dominating 3-1. I think that's very important. But that gives you an idea of what's going on behind the candlestick, so that you're not necessarily looking at what has already happened or trying to chart it on a certain time frame. You're looking at what happened in the last 5 minutes, 30 minutes, day, 4 hours. It's giving you all of that on one screen here, because unless you're day trading, you're not going to be looking at like 1 minute candles, 5-minute candles and stuff like that. But it gives you an idea of what the positions that are being taken out on a wide frame of target. So that psychological aspect plays a huge role, especially in a heavily retail-based coin like Dogecoin. Bitcoin, yes, you can have that, but there's a lot of institutions that are holding Bitcoin and are counting on it, and they have a lot of money. Retail coins you're going to be able to see, and it's going to reflect panic a lot more than something like a Bitcoin. Like those deep pocket companies and deep pocket investors, and Bitcoin, we see those dips, they're going to certainly buy a lot more aggressively. With Doge, it's been happening around the 15 to 12 range, which is what we've been looking at in the charts here. You'll see those really long wicks around the 12. But as Dogecoin gets higher in price, we'll see how that kind of correlates and with the amount of institutional money coming in versus retail, because when the price gets higher, retail's money will not go as far as it does now when they're looking to buy the dip, because it's a lot easier to buy the dip on something that's 15 cent a coin versus $1 per coin, right? Your money's going to go a lot further with the 15 cent. So that impact may not be there. So which is why I have the target at around $1.40 for my all-time high of this run here. But obviously we'll see. Charts say based off of history, I know I've done it in a few videos, we can get over $3. That's what history says. I get it. I'll happily be wrong about this. I hope so. But for right now, it's going to be, my target's going to be at $1.40, right? So those are going to be the three things that you need to know. I know this is turning into somewhat of like a lecture or a little movie, but I think it's very important for the community at large. So I think that we need to consider those things. So next thing I want to move on to is when I put when moon, because I see that comment a lot. The biggest thing is when we're looking at time frames for when the asset is expected to run. Obviously, we can look at history. It's still possible that we can have a shortened cycle, but because of what's going on with the macros, we may get the full 18 months, right? So typically the best time to get in the asset is at the price. Well, typically it's before the halving. As right now, as long as we're at the pre-halving prices, this is still excellent based off of history. Why? Because there hasn't been a time in history, 100% of the time, if you got in prior to halving or at the halving price, you were able to see a significant gain, normally well over 100%. So even at Doge, even as long as it's around 15, historically speaking, it puts you in an absolutely great position. So if your average is 15 or below, you're in a phenomenal position based off of history to perform well in this bull run. Now, if we are looking at cycles and saying, okay, when does this thing really start to get interesting? When do we get to the meat? Well, typically we start to see a gradual ascend, and somewhere typically in the later, like third, fourth quarter, we get that more aggressive parabolic movement. And then normally at the earlier part of the year, we'll take a look at some of the charts here, that's why I say it's like 18 months, normally around the earlier parts of the year, somewhere between like January and mid-May. That's when you start to get like absolute like God candles. Now, obviously there'll be ups and downs in there. It's not a straight shot. So you'll have people taking profits and re-entering or, playing with house money after they get their initial investment back. All that's up to you, but that's typically what the charts say, right? So we're going to take a look here at the charts because this video is approaching almost 20 minutes. So I don't want to, I know longer videos people typically don't watch, even no matter what kind of information you're giving. So I want to get to some charts here before we get a little longer. I'm going to switch screens to make this relevant. 1 second. Okay, so let me share screens here and then we will move on to our next topic. So let's look at liquidations first and then we're going to go to charts. Okay, all is well. So liquidations here, obviously we have a long still leading. Long short ratio, what I was alluding to earlier is we'll see a flip when the tides start to turn and investors start to become bearish on the coin. But right now, for the most part, it's pretty much 3-to-1, right? 3 long, 1 short. So long, people are still optimistic on the price of Dogecoin, and that's relevant in the 5-minute. You can see roughly 75, 25, 30, 75, 25, 1 hour, 75, 25, 4 hour, 75, 25, 1 day, 75, 25. This has been the case no matter what the price has been. So the sentiment for the coin, despite price action, whether we were at 22 cent or 18 cent, has not changed, right? So that has the tone of the coin going higher, the market believing that it's going to go higher has not changed. And we're still hovering around that 31 cent. Now, when we do see the fear come into the market, that is when we will see that tone change. So that's something we can look out for when we're looking at that reversal here, or trying to call a top for the coin. But until that happens, then we're going to consider ourselves still on track with previous trends. So let's transition over here to charts really quickly. Let's go back to, I want to try and, what's this? What year? This is 2023. I want to go back to 2020. Let's see. 2021. So this is the April run here. Obviously, we're going up to the previous highs here. But another thing I wanted to point out is we had this run and this significant sell off here prior to the all time high. And you can see the relevance in this across the board. We can even take a look at Bitcoin. You know, if you were in the coin, especially like me, if you got in around 5 cents, some of you are even below a penny, you would say the top was in and it's over, right? And don't get me wrong, this is still a significant profit from those areas. Even if you did end up selling it here, I'm not knocking you, but I'm saying you see this type of um, price action in the market where we have this big sell off here and it looks like it's over. But if you just keep your eye on it on the target here, you'll typically get a rebound here, and that's the real all-time high. So even if we do see that, at least what I'm going to do personally is if you do see that and you say, okay, I want to take some profit, what I would do is wouldn't necessarily liquidate everything, but I would ride this out to see, because typically we see that that ascension here. And to prove it, we can take a look at market dominator here, Bitcoin, and you will see certain price actions that align with that. Let's go back here. I love seeing all the charting and the breakdowns that we had here, like one down, like two down, like three down. I'll try and keep this on here just so we can kind of use it as references if we need to. Let's go here. So you see the price action here is similar. You can see certain movements, even if I'm not going to necessarily match up the time frames, but you'll see actions that, you know, being at 52,000, getting chopped down to 40,000, like $12,000 down. This is the second leg down. You got the leg down, try to retest, then the leg down again. It's like, you know what? The coin is down 12,000. Let me go ahead and take profits. The top is possibly in. We have a lot of momentum. People are talking about it. And then we have that boom, that ascension here. We can do this several times here with Bitcoin, because Bitcoin is infamous for these big sell-offs here. And this is, you know, you can even see this here on its way to its ultimate high up here. Not ultimate, but, you know, around the 64,000 mark. It was, look how rocky this is for people who haven't been in the coins long, or their short-term memory, and think that this is supposed to be a smooth ride. Look at this road to 64,000, like 41,000 down to 30, $11,000 drop, rise again to 57, gets chopped down to 44, rise again to 61, chopped down to 52. And we're not talking about, these aren't small swings. We're talking about 5-figure swings here in the span of like a weeks and months. We're talking about 5-figure swings here, right, before we get to that. So just going to keep that in mind. If you don't have the stomach for these ups and downs, I could relay this to Dogecoin, but you'll see some of the huge candles and sell-offs. Dogecoin was jumping 5 to 10 cents and then selling off 5 to 10 cents the next day. It gets very volatile when you're looking at the markets here. So those time frames certainly are irrelevant, but you're going to have to be patient in this market and be understanding that there's going to be a lot of wild swings in here, and the top may not necessarily be where you think it is. So keep that in mind. I hope this video has provided value for you. If you can subscribe, please do so. We're going to try and get to 100,000 subs before Bitcoin gets to $100,000. So looks like we have a little time here, a few months before we start to get to the actual meat of it. But we are in the second phase of the bull market, so that's certainly very exciting. So again, I hope you guys found value. Leave a comment in the comment section. Let me know what you guys are thinking, and I will get to as many of you as possible. Thank you, and I will see you guys in the next video.